computer screen would have like 20 plus tabs open. I would have all these different sports books. And like I said, I had the scanner, the OddsJam scanner. So basically I would just be looking for mispricing. I would be logged into every account, and there were certain times of day where there was higher liquidity, just like with stock markets, like near the close. You're going to have higher liquidity. Near the open, you're going to have higher liquidity. With sports, you want to be right near the event start time. That essentially is the liquidity event. So you'll see prices starting to move as we draw close to the sporting event. And then if you have some kind of information that comes out that moves prices, that's when I would swoop in and I would be like, okay, something happened here. We just saw a huge reprice on this team. Basically, I would take as much liquidity as they would possibly allow me. Exactly. Like I would max it out essentially. And then I would just
wow, that's cool.
Markets, speculation, and risk. This is the Chat with Traders podcast.
Hey, you're tuning in to Chat with Traders, episode 320. And this is Tessa Dow. And I have with me right now my co-host, Ian Cox. Ian, how are you?
Doing great. Thank you. Another interesting day in the markets.
Yeah, well, before we get into today's episode, we wanted to actually take a minute or two to share something. This will be our last episode hosting Chat with Traders, and it's honestly been a big part of my life over the past few years, sitting in on these conversations, working behind the scenes, and putting together the introductions for each episode. Those were always something I really enjoyed, and it gave me a chance to slow things down and really think about who we were talking to and why their story mattered. And to everyone who's listened over time, whether it's been for years or you're newer to the show, thank you. It really means a lot to us. And Ian, working with you has been great. The way you show up for these interviews every single time, the level of thought you put into them, it's a big reason the show is what it is.
Yeah, I appreciate that. And the same to you. It's been great working together.
Yes.
We've had a lot of very interesting guests on the show in the last number of years. A wide variety from day trading all the way to prediction markets, psychology, and macroeconomics. And I know I've personally benefited immensely from getting a variety of perspectives on the markets. I've learned a lot during my time here, and I appreciate the richness that all our guests shared with us. To everyone listening, thank you very much for spending time with us. We've covered a lot over the years. The show is in a great place, and at the same time, there's an exciting new chapter ahead.
And that's the main thing. Chat with Traders isn't going anywhere. The show is in good hands, and what's coming next is going to take it even further. That starts with a new host stepping in the next episode, and you'll hear from him then. You know, every host brings a different lens, and that's what keeps a show like this fresh and evolving. And I have a lot of confidence in him taking what's been built here and really pushing it forward. So definitely stay tuned. And as for me, I'll be focusing more on my trading. And if you're interested, you can find me on tessadow.com. And Ian, if you ever decide to put something out there, I know people would definitely want to follow along.
Yeah, well, we'll see about that.
Yeah. All right. Well, without further ado, now let's get into today's episode. If markets are really just expressions of crowd behavior and liquidity, does it matter whether you're trading stocks, sports, or prediction markets? In today's episode, Ian speaks with Stefan Stadie, a trader whose work spans both financial markets and the growing world of sports and prediction markets. He's a professional sports trader at Kero Sports, specializing in market structure, arbitrage, and market making, while also actively trading equities on the side. He's been trading full-time since 2019, starting in equities and learning like most traders do through experience and mistakes, eventually refining his approach toward more structured, process-driven trading, moving beyond purely directional bets. Now, what makes this conversation interesting is the crossover, but also the level he operates at. Stefan is active across multiple markets on a daily basis, working in fast-moving, highly competitive environments where precision and discipline matter a lot. At the core of his approach is a focus on liquidity, psychology, and price discovery, and applying that same lens across different markets. What I got from this conversation, too, is that it's not about prediction or opinion. It's about recognizing where real opportunities show up. We also get into how his approach evolved from more traditional directional trading into exploiting mispricing and capturing opportunities through arbitrage and market making, how inefficiencies show up across completely different markets, and why some of these newer arenas may still offer opportunities that are harder to find in traditional equities. He also shares what it actually looks like day to day, managing multiple markets at once, staying disciplined when things are moving fast, and dealing with the psychological side of trading when results don't always line up in the short term. And throughout the conversation, there's a perspective that might change how you think about markets and where to look for opportunity. We hope you enjoy this episode. Ladies and gentlemen, we're so pleased to welcome Stefan Stadie from Calgary, Canada.
Well, I'd like to welcome you to Chat with Traders.
Thank you very much. I'm very happy to be here and to talk about trading with you guys.
Great. Tell us a little bit about your upbringing in Calgary and how did you first get introduced to the financial markets?
Yeah, so born and raised in Calgary, lived here my entire life. My family no longer lives here. They moved down to the States. But yeah, growing up here in Calgary, I always was just very into business, and from an early age, very interested in stock markets and just like finance and trading. So eventually I ended up going to college at SAIT, where I ended up taking an oil and gas management certificate. And that actually broke me into the oil and gas industry. So I was working as a pipeline scheduler there. And we worked very closely with there was like a trading group, a crude oil trading group. And I became very interested just in the market dynamics and how crude oil markets worked. And that was where I first was introduced to the concept of risk management and just commodities and commodity trading in general. So that was where I really first got started. And yeah, I started just trading oil and gas company stocks on the side, got super into it, and it kind of snowballed into just a love of trading. So that was where I very first started off. Yeah.
Oh, wow. You're the first petroleum engineer I've had on the show. And I was just curious, could you share with us back in early 2020 during the COVID time, how was it possible that crude oil could go to a negative price? I don't ever recall that happening in the history of this planet. How on earth was that possible?
Yeah, definitely. So by 2020, I had actually left the oil and gas industry. I left there in 2019 to trade full time for myself. I wanted to do swing trading. So at that point, I was full on about a year in swing trading, and I distinctly remember oil going to negative prices and just being like very shocked because this was something we'd never seen before. But essentially, there was just so much fear in the market that people wouldn't be using oil to get around and transport themselves. So there's just all this uncertainty, which there often is in markets in times of panic, especially during the COVID crash, and it took down oil with it. Obviously, we got a huge rebound, but yeah, we saw some negative prices there that I think a lot of people capitalized on.
Were you fortunate enough to capitalize on any of that, or how did you feel during that time regarding crude oil?
Yeah, unfortunately, no. I actually took a step back at that time because I was about a year into my trading journey, and the COVID crash was happening, and I was like, man, like this is something I've never seen before on this scale or this magnitude. So I actually ended up like really stepping back and just trying to learn at that point. So yeah, I wouldn't say I was super heavy into the oil markets at that time, more just kind of like observing. This was about a year into my full-time trading career. Yeah.
What were some of the trades that you made prior to going full-time as a full-time trader?
Yeah. So There was a mini crash early 2019, end of 2018, and I remember just trading the rebound off of that, swing trading a lot of biotech stocks, and I was able to make a lot of money very quickly just trading the rebound on that. So that was kind of what pushed me to want to do that full time. Yeah, that was kind of my push out of the door of oil and gas. But yeah, I had been playing around with like IPOs and whatnot prior to that. And yeah.
It's so common for many traders when they first start off to blow up one or multiple accounts. How did you do in that regard early
Yeah,
on?
for sure. So I never actually blew up an account, which is really good. Definitely the first mistakes that I was making though was just trading too large of size, not realizing that, you know, your risk should be based on levels on charts, and your position sizing should actually be your risk.
Mm-hmm.
You know, I would just have like a standard position size that I would enter with. So as I grew as a trader, I realized that everything you want to do is based on your position size, essentially, always using stop losses, of course. Yeah, definitely the biggest mistake was trading too big early.
Help us understand what was too big for you percentage wise, like on each trade, and then what did you adjust it to?
North of 10%, unfortunately, but I would use 10% essentially of my trading account on a position, not realizing that the real key is the position sizing itself, and you need to do a backwards calculation. Now that's what I do. I say, hey, my risk is X. If that's the case, then I need to do a reverse calculation to figure out what that risk level is, and then I will size based on that. And when I enter the trade, everything will be pre-planned. My exit is pre-planned. My stop is pre-planned, and basically just following my plan to an absolute T. Complete discipline. Never break those rules, essentially. Yeah.
Okay, so it's 2020, and you're looking at the market meltdown and crude oil go negative. Did you get into any particular, or what trading did you do during the COVID crash and then the immediate rebound right afterwards?
I did have some short positions on, I think, SP, not the SPXL, the inverse SPY ETF. So I
Uh-huh.
had some scalps on the way down on that. And then after that, the rebound, trying to remember, this was quite a while ago. Just some crypto, biotechs, of course. Yeah.
So throughout this process, did you just learn everything by yourself, or did you have any mentors? Kind of what was your process to cultivate your knowledge?
Yeah, I actually really leaned in on YouTube to learn a lot. Nate from Investors Underground, I watched his channel relentlessly,
Uh-huh.
just trying to learn. I really love his like swing trading, but like intraday momentum style as well. So I learned a lot from him. Yeah, I used to watch all kinds of Forex channels, and eventually, yeah, I ended up just settling in on stock trading, and that's what I really loved. And when I first started, it was all basically long bias trading, and now it's much different. Almost everything I do is short selling, essentially. Yeah, so everything has changed dramatically since then.
Oh, wow. When did you first start getting into short selling, and why?
Yeah, I would say probably late 2020. I just started to realize that there was a lot more edge, at least for what I was trying to do in short selling. You can kind of go
Mm-hmm.
against the crowd more. It
Mm-hmm.
fits my personality a lot more too. I can just, especially now, like I can just see relative volume, and I can see liquidity events a lot more
Mm-hmm.
clearly. I felt that with longs, I was always getting chopped out quite a lot. Just the nature of how long bias trades move. They're very trappy, I find, but with short selling and especially swinging short, you just get a lot cleaner moves, at least in my opinion, if you have market
Mm-hmm.
structure in the right place. If you can combine, like I said, relative volume plus a liquidity event plus uh, resistance levels on higher time frames.
What's a liquidity event? Describe that.
Yeah, so basically, if a company comes out and they have some kind of news, it can be an earnings report, it can
Mm-hmm.
be, you know, if an oil company discovers a new oil field, or if it's a new partnership or something like that. essentially what that does is it drives in a lot of demand for that stock. So you'll see it in the volume. And that says, hey, new buyers are coming in. And what I'll basically do is I'll wait for that event to exhaust itself, and I'll wait for the backside, and then I'll take a short position rather than trying to anticipate like, oh, I think this is going to go. Like when I was early on in my career, it was a lot more about anticipation. Like, oh, I think this company is going to do this. I think this company is going to do this, which should drive it up. And it, like I said, it just ended up in a lot of chop. So finally, I started to realize that if I just have the patience and the discipline, I can actually wait for the event to come to me. So I can find these things after they've happened, and it's very counterintuitive, especially trying to short sell into, like, say you have a company that has a fantastic earnings report. It's very difficult to sell like a stock when they're having that kind of good news, but that's where the edge is you got to go against the crowd. You just don't want to be too early, of course. So there's very specific criteria.
Did you end up shorting any of the meme stocks in the frenzy, the run up in 2021?
No, I wasn't quite there yet. Like those were very volatile. I think I probably would have got blown out if I did. I was not quite at that point yet. If that was today, I for sure would be shorting those. Absolutely. But at that time, not quite.
Is that because of all the experience and knowledge you've accumulated since then that you'd have more confidence to take on shorts of these parabolic movers?
That's exactly it. Yeah. My strategy now is essentially shorting parabolic moves and liquidity events. So I think I would be a lot more confident doing that now, and just knowing what the signs of a top are, knowing when the move is getting exhausted, knowing when buyers are getting emotional. Yeah. And we see that a lot in crypto, like we see these cycles. Yeah.
So what are you, when you go short, are you looking to just scalp a few bucks on the downside intraday, or are you looking to hold for maybe weeks or months?
Yeah, my shorts are usually between a day and I would say not more than a couple weeks. Yeah. I'm not necessarily looking to scalp. I'm definitely looking for like the meat of the move.
So tell us how you transitioned to the predictive markets. Why get involved in such? Isn't it just all gambling? That's what they say.
Yeah. So obviously I was, trading stocks full time. And then we had new regulation here in Canada and the US where sports betting became a lot easier for people to access, especially not in physical, casinos and whatnot. Now you could do this online. So I had some friends that reached out to me and they're like, hey, you should try this out. Like there's all these kind of bonuses and perks that you can get for signing up. And I've always really liked sports. So I was into it and I was like, oh, you know what? Like this looks like free money. Like these companies are giving you hundreds of dollars to sign up and use their platform. So I kind of got into that, played around a little bit. And then it evolved into something where I realized I was like, hey, there's actually an edge here. Like there's a very big disconnect between all these different providers with the markets that they're offering. And you can actually go in there and you can use arbitrage strategies, or you can use EV plus strategies, which is expected value, which basically means that the price is way off market. So it's like if you're buying a stock, say Google's trading at, I think they did I don't know if they did a reverse split or not, couple $100, and you're able to get this for $150. That's essentially what I was doing with sports. Is you'd have a market price, you'd have liquid markets where price was very firm, and then you might see an outlier price that was way different from market. So I would take that price and then I would either hedge it out or arbitrage it out on a liquid exchange, and then you could essentially guarantee a profit on the difference.
So explain, how would you find these outlier prices? Why would they even exist if you have a liquid market? And how would you even encounter that?
Yeah, so I actually stumbled across this tool called OddsJam, which is essentially a screener. It's almost like a trading screen, but it's for
Mhm.
sports. So it would actually show you in real time, like, hey, these odds are moving, these odds are misaligned. And if you're fast enough, you can go and you can actually take those prices when they're mispriced, and then you can hedge them out against liquid markets. And the reason that these would come up, especially I'll use NBA as an example, very volatile pricing in NBA, by the way, because there's just so many superstars and lineup changes. So if you're coming near game time and say a team like the Milwaukee Bucks, say their superstar Giannis Antetokounmpo is sitting out, as soon as that news breaks, the price is going to
Mhm.
start moving rapidly. Like as soon as that news is confirmed, price will start moving rapidly. You'll get sports books that aren't quite keeping up with that. And this was very prevalent early on, like a few years ago. They've definitely tightened up a little more with the arbitrage. It's definitely tougher to do now. But yeah, you would see just massive price discrepancies that you could take advantage of. And I would just do that over and over and over. And yeah, I started to get really good at it.
Did you have a lot of knowledge of professional sports and the peculiarities of these teams prior to getting into this, or and how much do you have to study now?
Yeah, absolutely a huge sports fan. So I was very much knew how like the games work and the intricacies of all the rules and everything. But definitely still a learning curve. Like even to this day, I'm still learning quite a bit. And I actually do work at a sports book now. So I've actually joined the other side. Essentially, I basically told them like, hey, this is what I've been doing for the last few years. They've really clamped down on me. They don't like what I'm doing. And the sports book was really interested in that. They were like, oh, that's like the kind of thing that we want on our side. So I ended up joining them,
Hmm.
and now I'm a senior trader at Kiro Sports, which is a micro betting sports company.
Huh. You mentioned that you got banned or blocked previously. I mean, what? Why was that, and how did that occur?
Yeah, so I've been banned and limited from 20 plus retail sports books, we'll call them. Things like places like Bet365, FanDuel, etc. And I had a pretty good run there. Like I was doing a lot of arbitrage. I was moving a lot of volume. And eventually they just came to a point where they're like, hey, like whatever you're doing, we don't like the nature of your business, which is fair because I would come in and I was basically just taking risk-free profits from them like every month. Never really a
Uh-huh.
red month, honestly. Um,
Hmm.
because arbitrage is a type of trading that is very low risk and it's not super high reward, but you repeat that over and over again, and you can, if you make your 5% on an arbitrage trade and you're moving and basically you're taking two sides of the same event. So you're covering your risk entirely, right? If you have a sporting event, you have team A versus team B. If I bet on both sides and they're mispriced, like I can't lose, right?
Hmm. Give us an example of what would be a typical amount that you would, how much capital you would put up, and then what would be your expected return on that arbitrage event. And did you encounter many issues with liquidity?
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including zero commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
Liquidity was a huge issue, absolutely. When I first started off, I would say some of the first arbitrage trades I did, I would usually put like a couple $100 on each side, just as I was kind of figuring it out. You know, you make 5, 10, some percent on that, and you're locking in, $20, whatever per trade. And over time, yeah, I started increasing that amount. And I think that's the reason that these books let me, well, bet, but I call it trading because I'm trading against them, right? It's arbitrage. My risk is completely managed. I started off slow with these guys and slowly increased my size. And then I think one day they just realized, they were like, whoa, like, what is this guy doing over here? He's taking he's getting these insane prices that are far off market. He's beating us consistently. And it all kind of happened at once. All these different sports books messaged me, sent me an email, and they were like, we don't want like the nature of your business anymore. We're going to have to close your account.
But were you, I mean, you say that there's like multiple different sports books out there, but were you trading on all of them at the same time, or were you choosing one at a time? And then when you get kicked off of that one, then you move to the next one and so on?
I was doing them all at once. Yeah. I would have my computer screen would have like 20 plus tabs open. I would have all these different sports books. And like I said, I had the scanner, the OddsJam scanner. So basically I would just be looking for mispricing. I would be logged into every account, and there were certain times of day where there was higher liquidity, just like with stock markets, like near the close. You're going to have higher liquidity near the open. You're going to have higher liquidity. With sports, you want to be right near the event start time. That essentially is the liquidity event. So you'll see prices starting to move as we draw close to the sporting event. And then if you have some kind of information that comes out that moves prices, that's when I would swoop in and I would be like, okay, something happened here. We just saw a huge reprice on this team. I'm going to go into the soft book, which, Bet365 or whatever. And basically I would take as much liquidity as they would possibly allow me. Like, yeah, exactly. Like I would max it out essentially. Yeah. And then I would just arbitrage it out.
So you mentioned these outfits kind of kicking you off their site. Couldn't you, many people have heard about the phenomenal rise of the Polymarkets and all the different types of things that you can bet on there, including sports. At that point, couldn't you just switch over to the Polymarkets and then use like a crypto wallet so you could be totally anonymous and no one could theoretically kick you out?
Yeah, absolutely could. Yeah. And that's actually what I do now. That's how I've gotten around all of these is I'm on Polymarket, I'm on Bet Openly, I'm on Pinnacle, which is a well-known liquid exchange that doesn't ban sharp bettors because they actually use our action and our liquidity to shape their markets. So they're known as like the pinnacle of prices. Essentially, if you're getting pinnacle prices, you're in a good spot because they're so sharp and so quick, and they have global liquidity and they allow sharp action. So their lines are usually very close to the truth. Yeah.
So before you were, it sounds like you were playing against the house. Is that accurate? And then now, who would you be playing against? Polymarkets is just a middleman. Is that correct?
That's exactly it. Yeah. So I used to be playing against the house, and now it's peer to peer. So anytime that you see markets posted on Polymarket or Bet Openly, etc., it's most likely going to be another person, or it could be a small entity. I mean, it could be a large entity, but typically you're betting or you're trading against other people. Like you said, it's very anonymous. And if people don't like the prices that they're getting from you, then they can just back off and they don't have to continue playing that game essentially. So there's always new liquidity that's coming into the market in the form of different players, really. Yeah. So that's where I am now. I'm on the open exchanges. Yeah.
And then, so how are prices actually set on the Polymarkets? I mean, like say if you see an odds of something being priced at 30 cents on a yes, that's some event that's going to occur or happen. how did that price? How did it get to that price, and how and when does that price change up or down?
Yeah, so typically there will be an opening price, which is a soft price, typically model driven. There's many different companies that model these sporting events. Kiro, which I work for now, they model everything like very intensively, um, using all kinds of statistics and machine learning and whatnot. So basically, yeah, there will be these soft lines that first come out, and then as people start to bet or trade on these markets, the line starts to move towards the true probability. So if a line is posted a day before the event, it'll be beatable per se. Now you'll only have an edge if you actually have a model and you actually really truly know what you're doing. So I'm not trying to beat these models or anything. I'm just taking the pricing discrepancies and I'm using it against the market. If I see differences in prices between different exchanges, I'll, hedge them out against each other. I'll arbitrage them. I'll take an early position if price is starting to move in one direction, and then I can cover it later on closer to the event. But yeah, it's shaped by liquidity of the
Mm-hmm.
market participants. Yeah, just like stocks, basically you're bidding and you're selling. You've got your bid and your ask. It's not a lot different than that, really. You've got, hey,
Mm-hmm.
I think this should be valued at this price. So there's however many dollars on the bid and however many dollars on the offer. You've got a spread, just like in stock trading. Within sports, you have spreads between
Mm-hmm.
the buying and the selling price. So yeah, what I do now actually is a little bit of market making. So I'll take both sides and I'll essentially try and capture the spread.
Mm-hmm. Given that you used to work in the crude oil industry, do you ever place any trades on oil?
Yeah, I'm actually in a fairly large swing position right now on a long crude. Just from a couple of days ago, actually, when we initially had the news of the Iran war starting, I kind of sat back and I was like, hey, let's see what the market does here. Let's see. Obviously, everyone's watching crude oil. They're watching gold. They're watching silver.
Mm-hmm.
Working in oil and gas, I was like, okay, there's going to be an opportunity here. I'm not going to rush into anything. I'm just going to watch and see what happens. And a few days after the initial bombs started hitting Iran and refineries started getting hit, the Strait of Hormuz started closing down. We saw a huge price movement in crude oil, WTI.
Mm-hmm.
I think it went from 80 or $90 US a barrel all the way up to about 120. So at this point, I'm just watching. And anyways, we get a huge sales candle on the daily
Yeah.
chart, and crude comes all the way back down to about 90. So basically just this very ugly, kind of obvious selling event. So I did end up actually shorting oil that day, and I held my short for a couple days, covered that. And yeah, we've started to see a rebound, and I decided to take a longer term position on the rebound.
Interesting. So, in your view, that huge sell-off day that we had with the really long wick
Yeah,
and huge volume, was that isn't that a topping sign for you? Like the top is in, so to
that's
speak,
exactly
because of the uh-huh.
That's exactly it. Yeah, that's in my short selling. That's essentially exactly what I'm looking for. Is I'm looking for those topping wicks, those blow off moves, huge volume. I'll start looking at like the 5-minute charts, the hourly charts, and see like what happened within that wick. Did we see a huge parabolic within that wick, and we see an obvious uh, seller come in, and did we see the highest volume at the top of the move? Typically that would be an indication of a top. So yeah, I ended up taking a short there, held that for a couple of days, and then obviously with the news that's been going on in the Middle East, I think we probably continue higher. So in my opinion, that was a little bit of a pullback on oil. Yeah.
Oh, okay. So you're um, bullish for now, but still was able to
Absolutely.
take
Yeah.
advantage. Oh, you
Yeah.
are okay.
At this point, I'm
Mm-hmm.
in a longer term position on oil, I would say. Yeah.
Mm-hmm. So one thing I noticed, I've been using the Jupiter exchange to for predictive markets, and I've noticed that the volume on many of these things, many of these contracts are sometimes can be pretty low, and since you're into market making, I mean, what happens when if a user enters the market and people place their trades, they happen to enter the market during a quiet time,
Yeah.
relatively, and then how do they get their order filled if they don't come in right at the time when all these transactions, all this volume's going on? How do they get filled? Are there regular market makers assigned to these things, or is it just anyone can be a market maker?
In sports specifically, yeah, anyone can be a market maker. You're competing with other people to offer the best price. There's low-ish liquidity, but yeah, you're going to get slippage if you're coming in and you need to enter a position or get out, and the liquidity is not quite there. And that's where market makers thrive, is when people just start hitting the bid and the offer.
So is there a way that one can see when is an optimum time to enter a market, to pick up on, like, okay, right now is where getting a lot of volume. I should get a better fill if I enter now. Is there any tools to show, like, say, other than maybe sports, if it's any other type of market, maybe crude oil market, when is a good time to get in due to liquidity at that particular time?
Typically, the open and the close, I would say, would have the highest liquidity, and especially in sports, the close is that like hour before the event usually starts, and you'll usually have a lot better chance of getting filled at a better price. So that's when a lot of my trades actually fill, is I'd say like an hour before events or during events. I'll also make markets during live sports events, which is almost like the equivalent of day trading in a way, because it moves a lot faster, and you're doing it based on what's happening on a minute by minute basis.
So when you are acting as a market maker, can you give us an example, kind of what your targeted kind of percentage range that you're targeting for each transaction? Are you talking about like maybe less than 1% for each round trip transaction that you're targeting, or is it go higher than that?
Yeah, I would say the minimum is about 3%, but there are also fees that the exchange charges, which is about 1 to 2%. So minimum 3%, ideally 5+%. Sometimes you can get about 10% if you're really on top of it and someone's left out, maybe a stale market, and you can take someone else's stale market based on things that are changing, essentially related to that event, such as injury news or some kind of details that come out that were not previously known, and now they're known, and now price is struggling to kind of find, okay, like it's a discovery phase. Essentially, we move into a short-term discovery phase.
So as a market maker, are you just putting in order, a limit order at the bid and maybe one at the ask, and then waiting to get filled? Is that?
That's exactly it. Yeah. Yeah. Basically what I'm doing is I'm referencing sharp liquid markets, like I talked about earlier, like Pinnacle, Bookmaker, Bet Online. And these are sharp marketplaces where they're accepting large orders from known profitable bettors, known as sharps. So I'll be using them as kind of like a reference to what the width of the market should be. And then I'll set my own markets outside of those prices. So say there's a really tight market on, say you've got the Calgary Flames playing the Dallas Stars, and you've got say you've got the odds of the event are basically 50-50 for each team to win. So you've got the odds at -110 on one side, -110 American odds on the other side. So I'll basically be setting my market just outside of those ranges. So I'll be offering the Flames at -115. I'll be offering the Dallas Stars at -115, and people will come in and they'll hit both sides of that. And then those actually offset each other. So you're basically, you're making the spread essentially.
And they come in, they hit your bids and your ask because it's a sudden surge of liquidity that kind of wipes out the other market makers, and then you're the next one in the spot to collect this inflow of liquidity. Is that accurate?
Typically, yeah. Or in some tighter markets, it can just get very competitive. So you'll start bidding against other people, like, oh, this person's offering the best price. I'm willing to go a little bit better than that. I, of course, have ranges where I won't go beyond that. Like, I don't want to put myself in a negative EV situation. But if there's still a lot of room in that market for profitability, I will outbid people, and I'll just be on it like a hawk, and it can be quite competitive. And other times it's not super competitive. Other times people don't even go near the markets that I'm working in, and they just kind of leave me alone.
From the documents that you shared with us, it appeared on your calendar, multi-month calendar of performance, that you seem to be active almost every day in the markets. Is that accurate? Did I read that right?
Absolutely, yeah. Ever since I really started getting into the sports market making, specifically around the beginning of January, and you had the NFL playoffs happening back then, which is super liquid events. You had the NCAA, which is the college football championships happening, again, very liquid. You've got NBA, you've got NHL, college basketball. All these things are happening at once. You've got tennis. So basically, there's just all these different liquidity events happening. And I just started getting really into it basically every day. And I'll make markets wherever I am. I'll be on an airplane making markets if I have Wi-Fi access.
Wow.
Yeah.
How often do you actually take a directional position on a sports event or any Polymarkets? Like you feel so confident in it, you're not just making a market in it, you're actually going long or short, so to speak.
Absolutely, yeah. Every day, essentially. Yeah. If I find mispricings that are just absolutely way off market, I will take directional positions every day. Absolutely. Because I'm probably like altogether, I'm probably doing like around 25 markets or directional positions per day.
Per day?
Yes. Because there's so many events, you can have multi-type positions within one event. Like within an NBA game, you could have a position on who's going to win, what's the spread going to be. The spread is essentially the volatility of that event. You can make markets on what will the total points in the game be, how many points will an individual player get. So you can imagine these huge sporting events, like there's just so much opportunity for me to make 4 markets within one single event if the opportunity is there. I never force anything, but if it comes to me, I'm not going to say no.
Wow. So, I mean, your knowledge of these sports events must be very deep to be able to play all these variations and themes on this. The term, I heard the term come up called parlays. Is that accurate? And what is that? If I have that word correctly, because they talk about how gamblers are how the public is getting sucked into these micro bets that where they don't really know what they're doing, and it's just providing more just a greater likelihood of them losing money.
Yeah, I'm really glad you brought this up, actually, because I think a lot of sports bettors and sports traders will be very familiar with that term. And I think a lot of people are using parlays. It's almost like a leveraged way to make a lot of return with just a tiny bit of stake. And the sports books aren't going to like that I'm going to say this, but I never take parlays, first of all, because they're some of the most negative EV transactions you can possibly take, and they are some of the most profitable for the books, which is great. Like if people want to do parlays, that's fantastic. There is some edge there. I don't really go near that. What I do is I'll actually do reverse parlays. I will actually sell parlays, which is me. It's exactly what I'm doing with the market making. I'm just giving out juiced prices and I'm just combining it into a slate, and I'll actually sell people parlays. Absolutely. Yeah.
Because the probability of a positive outcome is very, very high. I mean, you're picking
Exactly,
yeah.
As long as the probability lines up, I'll take it for sure. Yeah.
So supposedly in 2024, I read that Americans wagered $150 billion on sports. Are we shifting to a time when everything can be a market? I mean, they're talking about the explosive rise of Polymarkets and Kalshi and how it's a new form of, they don't even call it gambling anymore. They just call it. What's your thoughts on that? Yeah.
You're absolutely right. And it's a little scary. And I do think it is going in that direction where everything is tradable. Everything is quantifiable now. You can trade or you can bet on pretty much anything you can think of now, from political events, of course, sporting events, the price of Bitcoin on Polymarket, you can trade whether that's going to go up or down. Yeah, it's basically just derivatives and it's unregulated, which makes it kind of scary. Polymarket is known for some insider trading, which, you don't want to get caught on the wrong side of that.
So then I imagine you would probably advise anyone getting into this to maybe not enter any market that could be insider trading, that could have that. I mean, obviously, like crude oil market, you're not going to have insider trading much on that, or gold, or what have you.
Yeah.
But yeah,
I mean, unless you are really sharp and able to follow the liquidity and maybe get on the sharp side, which might be the insider side, but I don't know for sure which side would be the insider side. So I would certainly recommend against that. If you're just looking for entertainment purposes, absolutely go for it. Take your bet, do what you want. Don't put your life savings on whether some president's going to get overthrown in a country unless you actually know what's going on.
that's a good segue, because I noticed in a few of the markets that I look at, to me, it appears that there's quite a bit of dumb money involved. And I don't know what you've experienced. But like, for example, one of the Polymarket's bets is who will be president of Venezuela at the end of 2026. And they have a list of, the current vice president, turned president, and then a couple candidates. And Nicolas Maduro, the former dictator who was kidnapped and brought back to the U.S., is on there. And actually, they had the bet at the time that I placed it was one could make 10% on their money between now and the end of the year, as long as Maduro doesn't come back to be president of Venezuela. And to me, that seems like a total easy money. That's dumb money, throwing money at Maduro. I don't know what are your thoughts on? Have you seen that before?
I've seen that kind of thing before, and there's also another very popular market on Polymarket that is, will Jesus Christ return
Yes.
in 2026?
Exactly. Another one was aliens. Will the government reveal that aliens exist? And yeah, I mean, many of these seems like it's can't lose, perhaps.
Seemingly. Now, the one thing with Polymarket is it all depends on how they settle that event. With aliens, you could bet that aliens will not return, that there will not be evidence. But if a government comes out and they say, hey, we have this conclusive evidence of unidentified objects or some kind of communication with outside life forms, the market may resolve as yes. So that's why I just would not touch that. There always is a chance that you could lose on those things, which is why I just don't touch it, really.
Interesting. So it sounds like then that it's critical to look at the specific language used in how a contract gets resolved.
Exactly. Yeah, you want to be super familiar with the resolution of those. Absolutely, because if they interpret it differently than you do, even with the Jesus Christ returning thing, it's hard to say. Like, I don't know what kind of event might trigger the answer to be yes on that, and suddenly everyone that's poured their life savings into no may be on the wrong side, and there's not a ton of regulation around Polymarket, so you're not going to be protected by the SEC or general laws and rules that typically are around financial markets and sports markets. At least with those, you have a lot more regulation. Polymarket is just so unregulated, and it has its place. Like you of course can make money and have edge there, but I'm approaching it very cautiously for sure.
How have your returns, being a market maker and or being going directional in the poly markets, compared with your stock trading? And do you see any similarities between each of those?
Huge similarities for sure. Definitely more profitable in the market making. Also, that seems to be just where my mind really like clicks with how everything works there. And sports betting and sports trading is in its infancy, in my opinion, compared to financial markets. Financial markets have really shaped and evolved over so many years, and they've become so efficient and hard to beat just with the invention of, you've got algorithms in there. With sports, very much in its infancy, just shown by the fact that there's so many fragmented odds all over the place. It hasn't really come to this one exchange yet where everything is agreed upon, like, oh, these are the odds for this event, etc. And I think we're getting there. I think places like Polymarket and whatnot are taking us there. But as far as similarities, yeah, you see liquidity is the huge one. You want to get into events where there's high liquidity to get in and out of positions easier. You see emotion in financial markets and sports markets. And you can imagine in sports markets how much emotion there is behind the money that's pouring in. So that's where I've really created an edge, is just you've got emotional bettors that need to make quick decisions, and they might be making the wrong decision, and they might take or make a price that is no longer the real price very quickly, especially if you're in a live event. Someone's watching a college basketball game. They're like, oh, I'm watching my team go on a 10-point run here. This is a no-brainer that they're going to win this game. I'm going to put out a spread bet. I'm going to put out +5.5 because my team's up. But their team was actually the underdog to begin. So their price that they're offering against the market at that time may be incorrect. And since the price is always moving, it may be correct when they post that price, but within 30 seconds, their price could be completely wrong. And I'll come in and I'll swoop that price, or I'll make a completely new price. If it's at like halftime, an NBA game or something, and I notice that the true odds are like game total over 219.5, but the market is saying you can offer an under 225.5 at the same price, that difference is pure edge. That's a huge difference. 219.5 versus 225.5, massive difference.
Interesting. So it sounds like you have to be really on top of all these different games that are going on, that things could be changing as you're, getting something from the refrigerator to eat or whatever. How much time do you spend and how focused do you need to be to keep track? And I mean, how do you keep track of all these different games going on and these events? You have to be laser focused, I imagine.
You absolutely do. Yeah. And that's kind of what I learned from working at Kiro, is we would be trading multiple events at the same time. So it made me realize that you need to focus on the most important ones, again, the most liquid events at any given time. And if I'm going to leave the screen and I'm going to go get a snack or I'm going to take a break, I'm taking down all my markets. I'm not leaving things up to get sniped or taken by people. And essentially what I do is I have my screen up here, and I'll have different references up all over the place. Like I might have DraftKings on one screen, Pinnacle on the other, Bet Openly on my phone. And basically I'm looking at all these exchanges and I'm looking for one of them to post a large price discrepancy. And then that's when I'll swoop in and be like, okay, like this is off market. There's an edge here. And you're right, it happens very quickly. It's very competitive, but you can find mispricings. And if I'm sitting here and I'm just watching the odds for 5 different basketball games at once, like there's a chance that one of them will have a misprice event, every half hour or so.
So it sounds like then you're active in both the, if we could call it the centralized traditional betting markets and the decentralized markets like Polymarket, where you can connect with your crypto wallet, and Polymarket acts as an intermediary, but you also are primarily active in the traditional gambling market. Is that accurate?
Yeah, I would say most of the volume I do is on the peer-to-peer market. So not
okay.
just because I am, like we talked about earlier, limited at a lot of the traditional sports books, they're known as the soft books because they're not quite as accommodating to sharp money. They're just trying to make money, on the spread or on what we might call dumb money, who's people placing a lot of parlays and not really caring about what price they take at any given time. For me, everything is it's not about trying to predict what will happen. It's never about my opinion or my bias. It's always about price. It's always, hey, this price is right in front of me right now. I can see that that's mispriced from the market. Yes, it's true that I don't like this team, but I'm going to place a wager or a market on them to win because it's so far from what the true market price should be right now. And of course, nothing's ever guaranteed. Like you're not guaranteed that it's going to win per se. But yeah, your position sizing would be a lot more like options contracts, essentially.
There's a philosophy in Silicon Valley that says if you aggregate enough skin in the game, meaning enough players, enough people who actually will put money into a prediction, then you create the most accurate predictor of the future. What are your thoughts on that? And do you see yourself as a market maker, as a truth seeker, or just a liquidity provider?
I would say I'm more just looking for discrepancies. I'm very much just trading the markets that are in front of me rather than, trying to model or predict anything. So I'm definitely more, I approach it from a trading lens. Yeah, I'm just looking where the liquidity is and trying to take advantage of disconnects in the market.
So I also heard that data collected from DeFi Oasis.eth shows that through late 2025, 70% of Polymarket users have realized losses, while only 30% are in profit. Since it's peer-to-peer, why is the house, i.e. the market makers, winning so consistently? I mean, shouldn't it be equal? I mean, for every winner, there's a loser?
I mean, those odds are actually quite good. Because typically with trading, you get like 5% or less of people are actually making money. So that's pretty solid. And I think that that's because it is a lot of just peer to peer, and it's kind of like dumb money versus dumb money. But of course, there's smart money in there as well. So I think it's inevitable that people will lose less money, but it's still very difficult to make money in those markets. And I did want to touch on your question that you asked earlier about with the high liquidity being a predictor of events actually happening, and the more liquidity that comes into markets, the better it is at seeking the truth. And I think that's absolutely completely true. I mean, anytime that you've got low liquidity, you've got less conviction behind what's actually happening. And when you have higher liquidity, it means you have more participants, you've got more people that are informed joining that market. And I think the aggregate of all of that volume gives a very clear indication of what the true odds might be. So volume is just so important in any trading market because of that.
Yeah. So I remember years ago how different people in the stock market make references to the madness of crowds when the public invests in the stock market and the crazy things that can happen. And now with the polymarkets or the predictive markets, I hear people say the reverse, the wisdom of the crowd. If you get enough people putting money on that. Can both be true? I mean, what are your thoughts on that about the wisdom of the crowds of events turning out to be true if enough people bet on them?
With stock trading, of course, you're going to get the types of things like pump and dumps. You're going to have those crowds that are rushing in without, knowing the full story that's actually behind what they're doing. With Polymarket, the edge is actually in the spread. So even if the crowd is right as an aggregate, if you're still taking one side of the market, you may be very close to being right or breaking even, but you're still going to slowly lose money because of that spread. So the truth lives in between that spread. And with stock markets, that's quite different because it's the reasoning that stocks move in the first place, which can be FOMO, or it can be newsletters coming out which are promoting false information. So it has a lot to do with the reason for entering in the first place.
So I also heard that DraftKings have launched their own prediction markets. With more participants offering predictive markets, do you think that benefits your typical user, or?
I don't think there's a benefit per se. I think it just offers more ways for the average person to lose money. It's kind of like sports betting. I mean, it'll be good in general to have more liquidity, and so that we can have a better picture of what the true odds of these events really are. Because if you have, again, Polymarket showing one thing and you have DraftKings showing another, one of them is right, one of them is wrong. How do we get to that place where we figure out which side is the right side? And we figure that out by bringing in more and more liquidity, more informed traders and bettors. And, if someone knows something or information changes, that can shape the line in real time, and we can get closer to the truth.
What are your thoughts on the gamification tactics? In old days, when you go to the casino, it takes time to go up to the place to get your chips, and it takes there's a time lag between the time that you enter the casino to get your chips and the time you start gambling, which allows the frontal cortex to maybe interrupt the pattern and say, hey, wait a minute, should I really be here? Whereas with these new gamification on your phone and the reduced friction to get involved, that what are your thoughts on, doesn't this turn into kind of an easy drug that's difficult to break away from?
Absolutely, yeah. And it's definitely a benefit to the big companies that are offering these types of markets, these sports betting companies. I mean, obviously they're very well positioned to take advantage of this new revolution that we're in here. It definitely can be an issue for people, though. I would say if you're treating it more like gambling, you might want to step back and think, what am I really doing here? Do I actually have an edge, or am I just becoming a part of this product that's being offered and being sold hope? Or am I able to manage this and I have a set amount that I'm betting per week? I do my parlays, but I expect to lose money over the long term, which I think is a safer approach for most people. But if you go in there and you just start firing away massive bets thinking that you can make a living off of this, just think hard and deep about what it is that you're really doing, who you're betting against, what are their motives, and be honest with yourself. Do I really have an edge here? Or do I really know what I'm doing? Or are these sports books just slowly taking money from me or other people peer to peer?
So then what would your advice then be for new people entering predictive markets in general, whether they're sports or whether they're, what would you suggest?
Always start small. You never want to go in guns blazing. Deposit a little bit of money. You'll notice with Polymarket, even when you make your deposits, there's a huge amount that comes off of your initial deposit just in transaction fees. Just getting money into Polymarket. So you're already down once you've started on Polymarket because of those fees, right? So you're already kind of in the red, which is fine. It's nothing major, but yeah, start small and track everything. See if you truly have an edge. And it takes time to really build an edge. I mean, a couple of years ago, I was trying to do my own modeling of sporting events and player props, and I couldn't quite get there to an edge place that I needed to be at. So I moved over into market making, and I started using sharper models from, bigger exchanges and more liquid books. And that's when I really started to find more success and stability, because making sports models is actually quite difficult.
For you, what do you consider to be a good return in the stock market based on all your tradings in the past? And what would you consider to be a decent return, equivalent return in making markets in the poly markets? What is that difference for you?
Absolutely.
What do you target?
Yeah, I think a pretty common benchmark for stock trading is if you can beat the S&P 500. I think that's very much agreed upon. If you can make 10% a year, that's fantastic. Obviously, it depends how much you're trading, what kind of trading you're doing, how long you've been trading for, what instruments you're trading, whether it's options versus straight stock. So I think if you can make 10% plus in stock markets, I think you're ahead of the game. In sports markets, I think it's a lot higher just because of how much more edge that exists in those markets and how much more fragmented it is. As far as percentage wise, when I was doing arbitrage, I was making probably at least 100% per year. And it's just because
Wow.
you're aggregating everything. You're rolling it over so quickly, right? Like the events are happening so quick, they're resolving so quickly. With stock trading, it's a lot slower. It's a lot, I mean, unless of course you're scalping or you're doing day trading, but I never magnetized much towards those. For sports, though, the edge just compounds super quickly.
So I heard that the prediction markets are forecasted to reach a $1 trillion valuation by 2030. Does the truth machine, so to speak, call that, get more accurate the bigger it gets? Or does the incentive to manipulate it become so high that the data becomes useless?
I think they become accurate, but I think that insider trading will not go away. So I think that will always be there. But overall, the money really is made in the spread. So companies and people are incentivized to find that true value and then just add on to each side, essentially what we would call a vigorish or a vig in sports, which is you're making people think that they're getting a fair price, but whether they're taking side A or side B, they are slowly losing money over time. Even if on the short term it looks like they're making money, they should be slowly losing money because they're getting underpaid when they win and they're overpaying when they lose. So there will always be an edge to the bigger players, but more volume, always good for getting more accurate markets. If you're trading in a very illiquid market, you're going to get a lot more chop and it's going to be a lot less accurate. Just like with, if you're stock trading and you're trading in something that's only trading 50,000 shares a day, like you're going to get absolutely destroyed on the spread and slippage. So, yeah.
Great. So looking at the future, if you could short current gambling boom in America, would you? Or is this a new permanent reality of the 21st century economy?
If I could short it,
Yeah.
yeah, I would not be getting in front of that freight train. I would not be shorting that. I think this industry has already proven that it's growing rapidly, and it seems like it's in the first stages, really just shown by, like, I always come back to comparing sports markets to stock markets. Like all the time I'm thinking like, man, these sports markets, they're so similar to stock markets, but they're so far behind in just the mechanics of how they work, how fragmented it is, how much edge exists there. I just can't imagine these slowing down anytime soon. And it's just become so normalized for people to bet from their phones and to have this liquidity, and especially Polymarket. Like, I don't know, people, maybe they don't think they're gambling there. Maybe, I mean, some people really are trading there, but it's just another platform essentially for most people for gambling.
So to wrap things up, what do you struggle with most in the stock market and in the prediction markets?
Psychology and variance, short-term variance can really mess with you. You can have an edge long term, but on any given day, your edge might not play out exactly as you think it will. Even if you're taking absolutely fantastic trades, getting fantastic prices. So the most important thing for me is process and discipline, and every day coming in with that same clean slate and knowing that what I have produces an edge in the long term. So just making sure that I never focus on the results of one single day and trying to zoom out and look at the aggregate results, I think is one of the biggest struggles. The psychology, of course, everyone gets fear and euphoria and greed, in stocks, in sports. Just don't make emotional decisions. If you're trading sports, like, things move very fast. Just step back, take a breath, look at what's in front of you. If you're going to trade sports, I would recommend doing a lot of it at intermissions, pregame, halftime. Don't do it while things are moving wildly. Like, if there's no stoppage in play, you're going to get absolutely smoked. If you're putting out a spread and things are like, you're going to get absolutely smoked, which is what I try and be on the opposite side of, essentially. I'll see people putting out stale spreads, and I'll essentially just eat those up.
Well, great advice.
Yeah.
What are you most looking forward to?
Just continuing to enjoy this journey, and I just love sports, so I just get so excited about, like, oh, March Madness is coming up. I know everyone's going to be watching basketball. Everyone's going to be enjoying these games. The NHL playoffs are coming up. It's just like this. It's this seasonal cycle, especially for sports, and I just love how serious people take it, and how great it is to watch and to trade these, and knowing that the liquidity just keeps coming back, because Super Bowl will happen again next year. The NBA championships will happen. FIFA World Cup will be happening this year. People will be trading and betting on those events. Like, it's going to happen, whether it's new people coming in or whether it's people that have been doing this for a long time. That's what excites me, is just knowing that there's always more opportunities, and I can always reinvent myself. I can start making markets for player props. If one thing's not working, I can focus on another thing. There's all kinds of, you can really dive in and find different niches within each game. You can find all kinds of different markets and trades, and on Polymarket, all kinds of different events. So you can find something you like, you can get very informed about it, and if you have an edge, exploit it.
Wow, fantastic. Thanks for coming on Chat with Traders and sharing all this fascinating information in this field.
Yeah, it's been a lot of fun. I'm glad you guys brought me on. I think it's really, really neat how all these different markets tie together, and just in the last couple of years, realizing that they're so similar. It's just such an eye-opening event for me. So being able to take what I learned from stock trading and then, turn that into arbitrage, and then eventually start working as an actual trader on the side of the sports books, was just, it was a kind of a no-brainer path for me. And it's been a lot of fun and very interesting. Everything is a trade for me.
Great. How can our listeners get in touch with you?
Best way to get in touch with me, probably X, which formerly Twitter. My handle is @bronzebeard with 2 Ds. You can find me on Threads under the same handle, but X is probably the best way. I'm not super active on there, but definitely check it.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.